The S&P 500 and the Nasdaq at all-time record highs. D7 here with Grok Trade Weekend Edition video. Good through February 16, 2020 in the markets. In the week, mixed, as you can see here. Only the Dow and the Russell's 2000 down in negative territory. We're a little bit of a dip here on the Russell's 2000 down 0.3%. Crude oil up 1%, silver up, gold higher, VIX lower at 13.7. That's very low, guys. There's no fear out there in the marketplace to speak of. Bitcoin dips below 10,000. We're at right around 9,900 time of this video, and here we are looking at the S&P 500. Subscribe, hit the button to get alerts if you want to have the latest of the markets here. Here we are. The S&P 500 just keeps going higher and higher and higher. That's what happens. We get a dip and you buy the dips and we go higher. It's an insane run that we're on. Even with retail, having some soft numbers, coronavirus, we just blew that off. The impeachment, we blew it off. We're heading higher, 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 higher. Here's what you need to be looking at. The S&P 500, we're going higher on the daily chart. I'm using TradingView. It's a software program you can get yourself. The link's down in the description. But you need to be long this market. If you are short this market, you're going to have your head handed to you. And you cannot prejudge the market. You can't do it. The S&P is going higher. We're above moving averages. Really pay a special attention to the 20 rising simple moving average. Watch that blue line. We need to stay above the blue line. Anytime you dip below the blue line, let that be a warning to you, okay? When it dips below the blue line, let it be a warning to you to say, okay, what pattern do I have? And should I be looking to preserve profits, take profits? And should I be looking to put stop losses or tightening stop losses on the positions, my open positions that I have out there in the marketplace, okay? You have to have a rule set in place to know what to do and when to do it, okay? So that's just a very crude indicator to be looking at to know if you should be concerned, okay? So watch the 20 simple moving average. In this case, it's the blue line on my charts, on the daily charts, okay? We're heading higher. The S&P 500, the Nasdaq closed at all-time record highs. Yet again, we just keep going higher. So this looks pretty good. As long as we stay above the moving averages on the S&P 500, we are good. The Dow, a little more problematic. We had a rising wedge. We go higher. We broke the rising wedge. We drop down. We do a little bear pullback. We pull back to the rising 20-day moving average, but it acts as resistance, and we drop. However, buyers came right back into it, and we pop above the 50-day moving average, and we go higher, and we're still chewing higher. We keep going higher here. As long as we stay above, again, the 20 SMA, we are okay in this market. The problem is we need to get above these trend lines, because if not, we're on the wrong side of this resistance, okay? That resistance needs to act as support to keep going bullish. That's what we're looking for. Nasdaq is up and away, doing really, really well. It did break resistance. You can see this. What was resistance, it broke resistance right here on this candlestick, and then we're just higher. So that is looking fairly well out there. Things are looking well. This is the Russell's 2000 small caps, and these are all ETFs I'm looking at, exchange traded funds. Exchange traded funds give me volume prints. Because of the volume prints, I prefer these over looking at the regular major indices. Okay, that's why I look at the ETFs over regular major indices. So I like the volume print, and it gives me a good look at what's happening. All right, so when I'm looking at the ETF here on the Russell's 2000, this is more problematic. This is like we got a shoulder, head, and shoulder. If we drop here, that'd be shoulder, head and shoulder trend reversal pattern. We have a big trend line that we're dealing with. Somebody asked in the comments, hey, can you show me where you're drawing those lines? Absolutely. So the line here on the Russell's 2000 goes right here on the day August 31st, 2018. Okay, August 31st, 2018. All right, so now we scrub ahead, and we had a major hit here on January 16th, 2020. Okay, those are my 2 points. That third point could be a dandy. The question is, will we even get to the line? If we fail to get to the line and we start off this week going bearish, that's bad news for the markets. Okay, that'd be bad news. However, if we get to this line and we can get above this trend line, that's very, very, very good news. So this is a very important chart to me as a trader. I've got to see the next couple of days. Will it happen Monday? Monday, Tuesday, Wednesday? What will happen those 3 days? Will we get above this trend line, or will we stay below it, will act as resistance, and will drop and head back down to this lower trend line? It could do that. Another line I could certainly put in here. Would be that. And, that's for you guys see this line. That's my minor, guys. That's for you Grok Mentor students. So I'm going to change this right here. Go to red. And let's thicken that dude up. Okay. That's not the red I want. I want dark red. No, not that red. I need the same red as this. I think it is. Let's go down one. All right, there we are. That's good. So we have this kind of triangle that we're dealing with here. So it'd be interesting. This is really important to me. What's going to happen? It could drop down. This would be first area of support. Next area of major support right down there. So be watching that. Financials, I really like to watch the financials, see what's happening. We are going higher. It is a rising wedge. And let me see what's happening on the center line. Yeah, so we're heading higher here, heading lower here. We got a bearish divergence, guys, on the MACD centered oscillator. And so that's something I'm watching for. This doesn't mean it's going to crash, but it has a real good chance of showing relative weakness out here on a larger time frame. So that's a bad sign. As long as we stay above the moving averages, all is well. It's kind of like a high base, a high pennant. If you look at this, a bullish pennant formation. Can we bust through all this? This week, we really need to see a nice move to the upside. That's what we need to see. Can we get that? Because right now we're kind of caught below a lot of areas of resistance. U.S. dollar is a big time buy. We're up. A nice, we got a high base with a slight pullback with a spinning top. That looks like we're getting ready to go bullish on the U.S. dollar. Crude oil is a bear pullback. Down. There's your W for bottom. We're heading higher to a resistance area, the trend line and the falling 20-day moving average. We have plenty of reward to risk ratio here. Be looking for a short on crude oil. Silver is still set up as a big bull flag. We're above 50% Fibonacci retracement. Look for that to go bullish. Gold is going higher. I'm just not as strong on that. So if I go back to silver, guys, this is a real strong. We had this falling wedge. We broke out of the falling wedge. Now we have a bull flag. Silver looks red hot to me. Very, very good. I like the dissipation of volume that was taking place in the flag formation part. And again, a 50% is very, very nice. I would like to see a nice breakout above 1680. If I could see a nice breakout above 1680, that would be great. Look for more upside if and when that happens, okay? Gold is a rising wedge. That's why I don't like it as much. It needs to pop up over this resistance. I want to see gold over 150 on the ETF. I want to see that. VIX is dropping. We had this big spike, coronavirus, impeachment, whatever you want to call it. Some soft earnings, whatever. We had a spike. That was problematic, especially when you get to the 20 mark. Anytime you get to the 20 mark, let that be a red flag to you. That is problem in the markets. However, we have dropped. We are far away from that. We're at 13.7. We're down here at real low levels, guys. There's just no fears out there. Bitcoin had a big drop as we speak. We're doing this on Saturday afternoon at this point. We're on the lunch hour, and we're dropping, and we've got a couple trend lines that we're down below right now. We need to get back above it, keep this as a high base, and for it to break out higher. If not, this could soften up a bit. The rising 20-day moving average, I'm watching that to find out how strong this is going to be. Okay, let's look at some stocks of interest. Let's go there. It's kind of cool. This has given me a new drop-down list, which is nice. We're going to look at the Dow 30 first. We'll look at Apple. Guys, everything that I look at here, I may or may not own these, okay? Education only. All right, education only. I don't need to keep saying that. I do. I legally need to be sharing that more often than I do. All right. Apple, we're going higher. you can just make the assumption. You can't make any assumptions, okay? I'm going to say that. You can't make any assumptions of I may or may not own any of these stocks. I don't know how else to say that. Okay, so Apple, we're going higher. I like this. As long as we keep staying above the 20-day moving average, I am happy with this. The problem is it's creeping higher on dissipating volume. I'm not liking that as much. So there's some support lines that I'm keen on. It'd be interesting to see when, if it does break down, will it stay above these lines? I'm really interested in that. AXP is heading higher. Very, very nice. I like American Express. It's paying it's paying some nice money, okay? Or it potentially could be paying some nice money. Boeing had this big rally right to a resistance line. This line comes in here. We got support. If you draw those lines correctly, you can see here where the shadow dipped right below it, but buyers came back in, it popped up, and then we gapped down. Usually when you break, and especially if it's a market maker driven or specialist driven open, which they all are, if it's they'll gap it past major areas of support or resistance because of these lines. You have to respect these trend lines. It drops down, we run up right to the trend line, and then we drop again. We come up, hit the trend line, we drop again, then we drop. We get to the trend line, the shadow gets up into it, people sell it, we drop down. But this is a nice rally to the upside. It's an inverted head and shoulders. We broke the neckline on this candlestick. That was February 5th. We go higher. Now it's a bull pullback. Now we're looking for a bull play. Now this is a little riskier because we got a lot of resistance here. We're over a lot of the moving averages. But if this starts to rally again, it'd be a nice trade to the upside. But you've got to be careful with your stop loss. Have it in place because you got a lot of resistance. But if it can chew through those resistance points, Boeing is going to be a nice trade. Caterpillar is a great setup for a short. Caterpillar is a short. This is a bear flag down. Go to freeonlinetradingeducation.com. It's the world's longest URL, but it's called Free Online tradingeducation.com. Go to chart school, look for bear flag, and you'll see this pattern. Down, flag, look for a short on Caterpillar. Cisco is doing really, really well. Came out with earnings, dropped. Stay away from this one. Chevron is up over a major area of resistance, and now it came down, finding support at this area that used to be resistance. Now it's support. Look for this to bounce. This could be a bull pullback. Look for that to bounce, start heading higher. This could be a V bottom for sure. Disney is in trouble. Stay away from Disney. No one wants any part of Disney right now. It's just showing a lot of weakness. GE is on fire, going up. The only problem with it is just the beta is so low, you don't make a lot of money on big moves, okay? That's why you'll very seldom ever see me in GE. Goldman Sachs looks, oh boy, this one's interesting. It needs to stay above the rising 50-day moving average. If it goes below that, just stay away from it. But it has its chance. If people are going to buy it, it needs to go up now. Home Depot is just doing really well. Love it. IBM had a big hit on Friday. Big drop. I would stay away from this one. Take profits. Intel is going higher, but it's one of those ones that starting to look like it's just not a great formation. It needs to get over $69 or so, but then we have the whole $1.70 to chew through. Just be careful with that one, and be careful with Intel. Johnson & Johnson has a nice bull pullback to you can see that the blue line is very much honored. Do you see this? It comes up honored. See how it's honored? It's just very much honored. We closed below it on Thursday. Friday we closed below it, but we do have a hammer. Here's the thing with Johnson & Johnson. If we go higher on Monday, that could be a trade opportunity to the long side. All right. JP Morgan, it's getting caught up in consolidation. Even though it's high basing above moving averages, we have previous swing highs that are active as resistance. I'm not keen on it. Coca-Cola keeps going higher. look for covered calls on something like Coca-Cola right now. McDonald's is fine. It's heading higher. We had the triangle breakout. Once it broke out, it's up, going. It's going up. It needs to stay above 20-day. Just so be watching that. 3M is a sell. Stay away from that. Merck, it continues to be a sell. Microsoft, long as it keeps going higher, this could be okay for Microsoft. Nike is trying. It really is trying. It's really trying. Let's see. That one, just stay away from it. PFE, it continues to be a sell. PG, Procter, stay away from. Travelers, stay away from. UNH, stay away from. UTX is pulling back to a support. That could be a bull pullback ready to go higher. I'm not overly excited about it, but there is trade opportunity there. And Visa is looking really strong. Looking very strong. Just stay with that one if you have it. Verizon, stay away from. It's a short. WBA, Walgreens is a short. Walmart, stay away from. And Exxon, just stay away from. That could get bearish quickly. Now we're going to take a look at Grok tech stocks. Now these move a little more. I'm more interested in these guys. And again, I may own one or I may own 70 of these, okay? So, may own none of them. So let's take a look. Apple already looked at. AMD is on fire like an AMD. Amazon is on fire, loving it, starting to soften up a little bit, maybe giving it another buy opportunity. Baba, big triangle, looking to go higher. If it can go higher, it needs to get above 224. If it gets above 224, I'm looking to either buy or add to a position. Okay. Baidu is not as excited about Baidu. Not at all, actually. Not at all. Yeah, look, Baidu could be a short, guys. Booking, stay away from. Cisco is down, stay away from. Catfish had a distribution day, dividends day rather, and so just be watching that. eBay is trying to go higher here, but it's doing so on low volume, not interested. Facebook could be a short, look to short. Google is a high base, look to go long. Google with an L, same thing, high base, look to go long. Whoops. I jumped way ahead. GoPro, stay away from GoPro. Microsoft, we already looked at it. MU, stay away, could be a short. Netflix, tweezer top. Okay. I think if you're in it, we need to tighten stop losses. Okay. Yes. If you're in this one, look to tighten stop losses. All right. Tweezer tops can be really bearish quickly, so let's take profits. Nvidia is up and away. This one had earnings, did exceptionally well, big volume, nice. I love it. Oracle, stay away from. Stay away from Oracle. Nothing there. PayPal is up and away. Stay with that dude. It's making money. All right, stay with it. We added Roku. So, oh man, I should go back and look at, I should give you guys names, call outs, but someone asked, hey, can you add Roku? I did. Roku had earnings. It did drop, but Roku's it's really popular. It has a ton of volume. I added it to my list. It is worth looking at. Definitely worth looking at. Very tradable. Shopify is a big time buy. Look to buy Shopify. It's doing well. Snap, just stay away from that one. Tesla, look to add to or look to either buy or stay with your trade if you are in this one. Twitter, same thing. I don't like what it did on Friday. We should have kept rallying on Friday. We did not, so that concerns me. That concerns me. Like, look at this trend line. We have support, support, support. And look how we go down, touch support, and we come right back up. Draw the trend lines correctly, and you'll know. For those guys, for those who are in mentoring. So listen, first, I want to say this. For you guys who leave comments down below, I love your thoughts. I love your ideas on the market, especially those of you who like to put your thoughts on the economy on it, or your thoughts versus commodities versus what's happening in the markets as a whole. You know, anything that goes even beyond the technicals you can get. Now, I have to say this. I am biased towards technicals. Here's why. Price action is raw data. Okay, I want to be really clear here. Follow me. The reason I hone in on technicals has to do with what I've learned in my 22 years of trading using TA, technical analysis. For 22 years, I've been using technical analysis. For 22 years, over 2 decades. I'm 46. This market will give us raw data. Raw data will come to us in price prints and volume. Price action, volume. Charts, volume. Okay? That's raw data. Whoever reads the raw data best wins, period. Raw data. Do not lean on indicators. Do not lean on oscillators. Do not lean on what you think is going to happen due to what's happening in the economy. The weakening of whatever. Or this is what's happening in the news. I'm telling you this from a lot of experience. Following news never helped me. News only got in my way. News only gave me a bias that most of the time was wrong. It never helped me as a trader. What did help me was getting into the minutia, the minute parts of technical analysis. In a 20-minute video, we don't go deep into technicals. I give you the 101 version. Now, you guys think it's the deep version. It's not, okay? What you see on all the videos online, what you see on my videos are very much 101. You cannot trade off of the 101 stuff. I mean, you can, you'll do okay. You're not going to make a killing, all right? Let's just put it that way. And you're going to end up holding things that you shouldn't be holding. But when you get into the raw data, price action and volume, when you look at that price action, you are looking at something that is reflecting reality. What reflects reality? Price action. Why is that? Because that's the market. The market is never wrong. Always remember, the market is never wrong. Now, say it again. The market is never wrong. The market is never wrong. You want to understand that. I'm wearing my mentor hat here. You're getting a taste of what it's like to go through mentoring. Soon as you believe the market can be wrong, you will always say the market doesn't make sense. It's just chaotic. There's no rhyme or reason. I just need to step away from it. Now, once you're there, it's kind of like wearing the victim hat. You are done forever. Anytime you think you're a victim, you're done forever. That's just in business and life and relationships. That's anything. If you're the victim, you're done forever. You'll never progress. Same thing happens when you think that the markets, if you believe that the markets cannot be quantified, you're done already. Your best bet in the market is to buy and hold. And I can't fault you with that. Buy and hold is a great strategy. Doing just basic covered calls is a great strategy. You can do that, just buy and hold. If you get into a buy and hold, just if you were to buy the spiders and walk away, you're going to beat statistically more than 75% of all financial advisors out there today, period. Statistics show that. If you want to beat 75% of just buy the spiders and walk away, your livelihood depends on making the right decision with the money that you have collected and saved. I am here to tell you that the most educated traders out there are the ones that will outpace the rest. Never forget that. Now, here's the caveat. Education is only as good as a person's discipline and an emotional steadiness in the markets. Those are very personal, intrinsic issues you got to deal with. But once you do that, you're good. If I can work with anybody, Mark can work with anybody who is highly disciplined and highly, highly emotionally sound, meaning they're not easily excited, not easily drawn to being depressed. Those individuals can thrive in the marketplace, can thrive as a trader. If there's a foundation of good, solid, rock solid education, if you have that methodologies, the different skills and techniques, and if you had the trading rules, you have those, and those are sound, okay, tested and tried and proven, and you're disciplined, and you have the emotional, you're just steadfast with fear and greed. Woo! You're a rock star already, and you may not even know it. You are the perfect student for us. That's who we're looking for. We want our students doing better than all the other students out there. We want them developing faster than all the other students out there. That's what we want. And yeah, that's me being selfish. I just want anybody that's a Grok trade student, we want you doing better than everybody else. So, but I say that to say this. Price action is king and queen, right? If price action is king and volume is the queen, and that's raw data, you need to analyze that better than everybody else. You've got to analyze it better than everybody else. So I look at these charts. I look at them, study them, and I can see when I look at these charts, there's money. There's so much money out there. It's all around us. All we have to do is stick our net out and grab it. Take, preserve, take, preserve. That's it. Not taking wild swings, not being gamblers. Be in the house, take, small, grow. Big swings, never make it. It is a fun game that we play, guys. Fun game. Game. Yeah, anyway. Can you tell I'm passionate about this? Passionate about trading. What I'm most passionate about is you not losing your money. If you're down 15%, ouch. You should be up money, not down. If you're down 20%, ooh. If you're down 30%, I'm sorry. If you're down 50%, you've got to do, if you're down at all in this market, you need to stop the bleeding, put a tourniquet on it, turn things around. Do something different than you've done before, because what you're doing is not working. You need to understand that. Most of us are very pragmatic thinkers. Just be thinking, if I'm losing money, I've got to change that. Throw that out. Don't be biased towards your ideas and your thinking, your methodologies. Throw that out and change it. You've got to be making money. Always let the market be your benchmark. Are you doing better than the Dow? Are you doing better than the S&P 500? If you are, boom, rock and roll. You're doing it. Love it. Because eventually, depending on your dollar amount, you are now on the path of being a full-time trader. Once you're a full-time trader, the freedom is unbelievable. Last time I had a job, J-O-B, what year was it? 2004? That I had a job. That's a good, man, it may be earlier than that. I can't believe. I should have that figured out before I do my monologue. Anyway, I can't believe if you're still with me, say made it, because, because you did. You made it. So that's it. Hope you guys are doing well. Look forward to an awesome week of making money in the markets. Share us with a friend. Follow us if you haven't yet. Catch up with you later. Bye.